Good afternoon, this is Rich Nelson with Allendale. Let's cover the wrap-up comments here for Monday, February 6th of 2012. Obviously, as far as outside markets, we do have some things which are supporting the U.S. dollar. Friday's employment report was good. Also today we have some concerns about the problems with Greece, the continuing lack of progress on either end of their two-sided negotiations. We also have some other things to talk about as well. Syria being a concern, Iran being a concern as well here. So the U.S. dollar was higher today by a good 55 points. However, in the last trade here, certainly after the corn close, it was up only 10 cents here. So generally a higher U.S. dollar would imply lower commodity prices. And that was seen as in general here, with crude down about 70 cents and gold down about $15 here. So as far as this goes, it also did act as a little dampening effect on grain prices as well. Corn down 1/4 cent, beans up 1/2 cent, and wheat up 7 3/4. One thing we did want to point out here is, as far as the soybeans, today we did get up as high as 11.5 cents higher, but only closed up 1/2 cent higher. So obviously we had a big rejection day as far as the soybeans. And for you guys who do watch the charts, we must point out that actually we attempted to retest those highs from early January. Those highs were 12.44 3/4 on the March contract, and today's high is 12.44 itself. So we did have a rejection of higher trade, rejection of retesting those highs from January here. So it's really important for us to watch these charts as well and see if this rejection holds. As far as general fundamental news, I'm just going to point out the estimates that we came out here for Thursday's report. On Thursday, USDA will give us one of those regular monthly supply demand reports, where in this case they'll be just changing the demand numbers just a little bit here. And the reason why they will be changing them is with the updated estimates for South America production. They expect Argentina to be lowered from 26 million tons down to 21.7. That's a pretty good drop. They expect the Argentina soybeans to be lowered from 50.5 down to 48 million tons. That's a moderate drop here. So we do expect to see a drop in Argentina corn production, pretty good size, and USDA says some of that, or the trade thinks, some of that will be put into U.S. exports there. So average guess for ending stocks for the corn going from 846 million bushels down to 791 million bushels. Average estimates for soybeans, not that much of a change. 275 million bushels last month, down to 273 million bushels is the average trade guess. Keep in mind this report will come out on Thursday. The reason why there's not much of a decline there for ending stocks, most people are not going to change their U.S. export forecast because we aren't meeting USDA's pace in the first place of the number they gave us back in January. Wheat numbers, not much of a change there as well. 870 down to 867 million bushels is the average guess. We do here at Allendale have a little bit lower ending stock number. We do feel that the exports are doing a little better than what the January pace the USDA implied. So as far as that goes, we'd have a little bit lower wheat number. But as a whole, this should be a corn report to follow, and the thing we're looking at is exports. As far as livestock, down 12 cents for the April contract today. Actually, that was not bad considering the decline we had for prices from Friday. We also have some evidence, as we talked about in this afternoon's meeting with the brokers, which is available to you guys who are subscribers. That decline, or that presentation we talked about for livestock, did point out there is signs of consumer pushback on prices. This is actually going on in beef. Both ends of chicken, both the high end as well as the low end, and also for pork as well. So the fact that we got this little pushback right now, the fact that we have packers cutting kills, this will be a third week in a row now of heavy kill cutting on the beef side. So considering all those factors, down 12 cents a day for futures was not bad at all for live cattle futures. On the hogs, down 37 cents. Like we noted in the cattle comments, simple fact is we do have some light consumer pushback for pork as well as the other meats. Packers did cut the kill a little bit here last week, but right now I'm a little surprised to see today's kill number, 419,000 head. It's a little better than the average analyst guess for daily kills of 411,000 head. There are 3 firms in the industry which put out daily estimates for kill numbers, Allendale being one of them. So the fact we did have a rebound, a little better, higher kill than expected, maybe shows these packers are not going to be as aggressive cutting the kill this week as they were last week. So maybe that's a slightly positive sign we do have to point out here. But obviously, we've got a lot of things going on. One thing we do want to point out is now is the time to get prepared and discuss what's going on with Thursday's report. Also, more important than not just the numbers, but whether the market has already priced this in. Keep in mind we have had a good moderate rebound for both corn and soybean prices in recent weeks, and maybe now it's time to talk with your Allendale broker on whether this report's already priced in. More important, what to do from here. What type of cash grain sales to discuss, what type of cash livestock sales to discuss, and any hedging strategies certainly for future production, 2012 production for grains, and certainly the remaining production here for livestock as well. So feel free to give us a call here at Allendale. A lot of important things to discuss. 1-800-262-7538. Once again, that number is 1-800-262-7538.